March, because March is the start of the tax year for most actual companies. Most companies are registered and their tax year is end of Feb. So it ended end of February. So this is the new tax year. So what we want to do, take you on this journey. Some of you have obviously been joined onto our Adopt SME program. We'll be doing your accounting, your tax, and those things. The rest of you are happy to come to these talks, get all the free advice. As our actual program expands, we are trying to bring 200 SMEs onto the program. So we are raising funds. Corporates are talking to us. If we can get them to fund all 200 SMEs, a lot more of you will actually be on the program. All right, and the program runs across the entire country. We've got people all over. We've got about 100 people online. So yeah, this is actually taking place all over the place at the moment. Cool. So this is going to be, some of you have already been here. You've seen the talk. We do repeat this talk. Not exactly the same sort of exact talk, but there are pieces within here that we repeat over and over because it's important. Things like taxation, your annual financial statements. These are things that are very, very important. How to budget, things like that. And we're going to repeat them at times throughout, like in the year. It's going to generally be about August of the year because taxes are due again in August. It's going to be due in February again. So it's sort of January. We're going to do a tax talk around annual financial statements. So you're going to hear some of these things over. The sad thing about accounting is boring as hell. The same thing happens every month. The same thing happens every 6 months and things like that. And the point is, if you can get the basics right, and get your budgets, get your books up to date, get your numbers where you know them. And they don't have to be numbers perfectly. I mean, we get the fact that not all of us have access to accounting software. Not all of us have access to internet and things like that. Using just a piece of paper. As long as you've got some idea of how your business is running. Are you making any money? What are your sales? What are the cost of those sales? Are you making enough money? That's the best start you can have. Doesn't have to be fancy. You can do it on your phone if you can. So this journey is going to take you through that. And it is, this talk especially, we cover a hell of a lot of ground, right from registering a company all the way through to do your taxes. So just stop me, ask me. There's no formal oh, I don't want to actually interrupt. Stop me, ask me, please. Otherwise, at the end of the session, you're going to be like, shit, I wish I asked him that. Now I don't actually remember because I got 17 things I'm thinking about. And then also we email and stuff on here. Send us emails. If you've got a question, send us an email. And I say this every talk, and we did 12 last year. I think we received maybe 5 emails asking us stuff. Those 5 people are doing a lot better than everyone else. Okay, please ask us. We do this for free. We do it on purpose to help. We want to grow like SMEs because you guys don't get help. So yeah, just allow us to help you. Okay, cool. So I'm gonna, if I can get the tech working, I might have to just manually. You guys have to bear with me on this one. We seem to be technologically challenged here, Ed. There we go. Okay, we don't want to see about me, the boring guy that they wheel out to do these talks. No, Mandy, I am good for now. Let me just.
At the same time, so it's just to get the technicalities right so that they can hear, they can see, you can hear, you can be busy.
Okay, cool. Thanks, Mandy. Appreciate that. So we start, why do businesses fail? So why does a company fail? Any of you have an idea? No. Pardon? No money. Not really. Not really. You'd be surprised. Yeah? Mismanagement of funds, cash flow. Yeah. Marketing, not knowing who your clients are, what they're going to pay. Yeah, definitely. Anyone? No. So there's a whole host of reasons. And the thing is, it starts at the actual foundation phase. Just like a house or a building, get the basics right. That is the key. If you got the basics right, everything flows from there. And remember, it doesn't have to be fancy, just as long as you know. The person who's got to know is you. If you know, you can fix anything. The person next to you doesn't have to know what you know, actually know. They can't fix your company. They can only help you if you share that information. So as long as you know, and you don't need fancy spreadsheets, as I said. So yeah, we're going to go forward from there. Okay, so that's as I'm going. So same as building a house, you want to get your foundations right. With the right foundations, obviously, you can build on there. It gives you strength. It actually gives your company strength. And yeah, so what we're going to go through, as I said, is going to be right from the start. There are some of you that won like an actual company registration. We gave you guys a free company registration. So this is what we're going to be doing. The types of companies. Guys, sole prop. You don't have to rush off to CIPC and register a company. Please don't go waste your money. I know it's only 175 Rand. And that's not isn't it exactly lots and lots of money? I'm just going to move this out the way. So we can get. Okay, so start as a sole prop. What that means is just you trading as, and you can trade as the name that you want. So you can be Marcus Tyron trading as SME.TAX, although that is a actual company, but you can trade as anything. Obviously, you can't be Tyron trading as Coca-Cola. I'll get sued. So within whatever you want to be doing, just start there. Although it only costs 175 Rand to register a company at SIPC, the minute you register that actual company, they give all that information over to SARS, and you get an income tax number the same day your company is registered. And trust me, while you're waiting to get your business going, that's when your headaches start, because SARS, they don't sleep. They want money badly. You'll start getting SMSs. You'll start getting emails if you sent an email address on your application. And if you don't submit your taxes, even if it's nil, they'll start giving you fines, start giving you penalties. They can even send someone out to pick you up and arrest you for failure to do your taxes. So don't register a company unless you actually need to, especially at the early stage. While you're still feeling it out, what's happening, start as a sole prop. It trades like anything else. You can open a bank account easier. The accounting works the same way. The marketing works the same way. You can be a sole prop and even actually register for VAT. So just bear that in mind. So first short while you getting going, start as a sole prop. Okay. Personal actual liability companies, mostly law firms, accounting firms. The difference there is the shareholders are personally liable. So if something goes wrong, just like a sole prop, if something goes wrong, you can sue the shareholders in terms of that. So they're personally liable. Okay, so, and that's why lawyers will normally do it, accountants, why you always have lawyers have this, like insurances, accountants have insurances around that. So depending on how you structure your firm, not so many people use it anymore. Even law firms and stuff are sort of moving away from it. They just keep the ink for their trust and stuff like their trust accounts, but their business itself, they've moved out into normal companies from there. Closed corporation was introduced in 1986. You can't obviously register a closed corporation anymore. They changed it in 2011, like in the New Companies Act. And the point of the closed corporation was to help SMEs get started, get going. It was cheap, it was easy, it was quick. One form, done. The New Companies Act does that now. In fact, smaller companies on the New Companies Act are easier to run than a closed corporation. There's less costs involved. So There's still some work to do with the CC, but if you have a CC or access to a CC, you can still use it. Okay, what the closed corporation does is it actually looks after the actual members. So now you don't get sued. They sue the company or the closed corporation. The closed corporation then fights the law case, and then only if there's like fraud or something where you've willfully like actually broken the law, then they can come after the shareholders, although they're called members. So that's where that is. So if you have a CC, you can still use it. You don't have to close it down. If it's trading, it's fine. Okay. The most common company is the PPUR. If you go into SIPC now and you register a company, that's the company that you're going to get. That's the standard company. As I said, it's only 175 Rand, but it also looks after the shareholders. The shareholders don't, someone actually sues the actual company. They don't sue the shareholders. If the company goes under, the shareholders only lose as much funds as they use to fund that actual company. Generally, they can't come after the shareholders and sue them for their house and stuff like that. Although I'm sure if you haven't experienced it, you will experience it. Banks and finance corporations try actually get around that by making you sign personal surety ships. And the reason for that is if your company fails, they can come after you personally. So it's, yeah, it's one of those things that shouldn't be there. They should not allow it, but that's the nature of the beast at this point in time. So if you can avoid signing any personal sureties, do that rather. Okay, so those are the different types of companies. Anything on that? Questions on that? Okay. Nothing. Okay. Awesome. Yeah, I'm going to go through, these are the things that happen generally in this order. And so I'm going to walk you through sort of when these events will happen. So it'll give you an idea. And you don't, yes, you can do them, you can skip them, you can do them all at once if you want to. But generally the sequence would be, if you've got like actual partners in your company, stuff like that, do a shareholders agreement. If it's a CC, do a membership agreement. It's the same thing. And that lays out the rules between yourself, your shareholders, what roles they're going to play, how you're going to fund the business, and you do it early. That when you still, everyone loves each other and you want to get going before everyone starts fighting about the money, things like that, do your shareholders agreement. And I promise you now, I've never, in 30 years of doing this, seems forever now, in 30 years, I've never had shareholders fighting about, we've got too much money. Never, 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 ever. If shareholders said, this is garbage, I'm leaving this business, there's too much money in this, I'm out of here, you guys are mental, I can't do with. They fight when there isn't enough money. Always. And then you're looking to go, but who's not carrying the can? I'm working, I'm at work every morning at 6, I leave at 8. You arrive at 4 and you leave at 8 as well. They're like, how's that fair? Yeah, but I'm the salesman, so I'll bring in the million rand every day. I don't have to be here all day. Your job is to get the work out. So you got to be here early. So, but that's what's inside your shareholders agreement. Stipulate those things up front and the document's live. So if you get another shareholder, they have to agree to those plans. If you see it's not working, now you're a little bit older, you understand how things work, change it. Sit down while everyone's still happy, change it. It's not a case of we wrote it, throw it in the drawer, done. That thing's live. And if you think of it like that, it's going to help you a lot. Okay. MOR, before I ask you on MORs, how many of you have actually registered a company at SIPC? Okay, a few of you. Okay, a few of you. Have you guys seen your MOR after you registered your company at SIPC? It's not long. It's about 4 or 5 pages. The 15A, 15.1A. That's the standard. And it's like the basic conditions of Employment Act. That's what it read. If you want to sort of break it down in terms of company sense, it's like the basic conditions of Employment Act. It gives you the minimum stipulations as part of what shareholders should do. You can use your shareholders agreement to make it more like your employment contract, but you can't take away those rights. Okay, read it. It's only 4 or 5 pages. 15.1a, it's worth it. Questions on there, email us and ask us. I promise you. It's think of it like the sort of an employment contract of your company. Okay. So what it does exactly that, it guides when you have your shareholders meetings, it guides how do you trade the shares, you know, the rights. You can't just sell someone's shares. So go through it. And these things can change for all of you. So whatever your circumstances, whatever you and your business partners would like to do, put them inside there. And you don't have to come up with some fancy legalese, therefore, if thou, no. I would like this. Write it in just whatever language. We've got 11 languages. You can write it in any of the 11 official languages. As long as you guys sign it, it's a legal document. Okay, it doesn't have to be stamped by a lawyer or anything like that. All right, cool. Trademarks, I'm going to touch on because a lot of people don't realize in terms of things like copyright, trademarks, you can register a trademark at CIPC. Generally, that'll be like, especially if you want a name you want to sort of look after. Coca-Cola is a good example. The Sharks, they have a trademark. SME.TAX, we have a trademark. You don't want people to utilize that name. So it allows you then for once, it's not very expensive, it's about R1,000 in total. And it gives you the trademark for 15 years. And then you can extend it for 10 years at a time after that. But what that does is then no one else can use that name. But you can't trademark like common names. Like I could tell you now with the Sharks, they can't trademark the Sharks. Those are common names. I can bet you that if I go and look, they've been trademarked. It's the badge, it's the icon, it's everything. It's in black and white, the color scheme, everything is what you actually trademark. Like Avis, if you think of Avis, you know, the actual car company. Avis has their own red. That red of Avis, it's theirs. They made that red. They paid somebody to make that red. No one else in the world can use that. That's Avis red. So all their badging, everything is done in that red. That's how far you can actually take it. Coca-Cola, the outline of the little Coke bottle, that's a trademark. Because they're the only ones who have that shape. So think about that. It's not expensive to do. As I said, it's about R1,000. It's subsidy if you do it yourself. So if you need it, do it. Think about it. But then trademarks extend, and I'm using trademarks in the broad sense, to things like a lot of us are online. A lot of us are writing. We write blogs. We've got our website. Our website's got all the information about a business on there. You might write a manual, a staff manual, training manual, all those things. That falls under the Copyright Act. Like an author writes things, no one else can go and take that and use it unless you authorize them to do it. So your website, someone can't, and you see it, mostly in varsities, you hear about it where people come and they plagiarize work, somebody else's work, they just taken the text, copied it, pasted it. I'm in, I'm done. No, you've actually copied someone else. You aren't allowed to actually do that. That's why they fail you at varsity. The same thing on your on your website. You can actually copyright all that stuff. And if you find people who actually use it, they should then come and either ask you, may they, or pay you for it, because that's your actual thoughts. If you write a program, IT program, anything like that, a game, you build a game, that falls under the Copyright Act and under IP, intellectual property rights. So it's a bit of a broad thing. Not everyone will obviously need it, but know it's there. So as your journey goes along, you know these things are there. Okay. Patents, very helpful. Except Elon Musk is turning it on its head, making sure, like, although they patent lots of stuff, it's freely available for anyone to use. The trick with patents, what it was meant for is that if I came up with something really, really smart and I wanted time to get access to the markets, normally if you do R&D or patents, like build a cell phone or a laptop or something like that, it takes a lot of money. to build that thing. You've got a lot of R&D, a lot of like drugs, if you want to go like in the pharma industry, a lot of those guys are using patents. And then that's the way for you to make your money back. So that's for that. So no one can just come and copy it. They're going to pay you for it. And even if you think of like Apple's laptops, phones, a lot of their tech is owned by Microsoft. Because Microsoft patented how the architecture works, how email works, how Windows work. So Apple pays Microsoft a lot of money and things like that. So that's why you want to do the actual patents. Problem nowadays is that there are people sitting at patent offices and they're actually like patent thieves. So it's you sitting there trying to do a patent and they then already copied the patent and are making your product in China. So there's been a movement for years now where people leave certain things out of their patent, purposely leave key thing. Like if you think of a gun, they leave out the firing pin. So it's you can't actually like it's like a dud. So they leave certain things out, so people can't steal the patent and then just go and do it. So just to sort of highlight those things. Okay. Okay, so getting now, so now that's your back-end structure we're talking about. Now your company, this is the stuff you're going to sort of encounter in your day-to-day world, owning a company. So as I said earlier, the minute you register your company at CIPC, they send all your info to SARS. And literally, if you have registered people who have, you would have got an email from SARS almost as fast as you got the email from CIPC to say your company was registered, saying, well done, you're now a taxpayer. So that happens automatically, the income tax. And the reason why is that SARS wants to know what you owe them. You might owe them nothing, but they want to know. And they're going to force you by force, literally force, by police come and fetch you and put in a tax return. Okay, so that's the first thing. Caesar wants to know what's due to Caesar. Okay, so then the next part of your journey, the minute you hire a staff member, and it might even just be someone working 21 hours a month. That's it. That's how low it is. 21 hours a month, UIF. So that's how low the bar is. The minute you actually you hire someone, you have to register for UIF. And a lot of people think, headache, admin. The thing about it, obviously, is insurance fund. People lose their job, they can go claim. It obviously serves a purpose. You actually pay a portion as a company, and the staff actually pay a small portion. Okay, and in line with that is workman's compensation. And workman's compensation is also an insurance. So if someone gets injured on site, you know, if you're speaking here at the Sharks, if you slipped on the stairs, that's it. If you actually break your leg, you go straight to the hospital. It pays for everything. So it covers you from the time you leave home all the way to work, your day at work and home, not via a friend's house home, direct transport. You can't go to the tavern and then, no, I've got a cut on my head. No, that doesn't work. But even like a taxi accident, think about it. These things are real. It happens. It's a real thing. You jump the taxi blast, you come up here, there's an accident, you can claim under the compensation fund. And it helps at work. You slip off the back of the van at work. You drop something on you. That's what it's for. Because if the small business owner has to pay that, generally they'll end up closing down. Like hospital bills are like hectic. So by law, you have to. The minute you have someone employed, workman's comp. So those two are the things that you'll generally encounter almost immediately. Almost immediately. Then it moves on, from there. And before I just go further than that, a lot of people look at the pay-as-you-earn line and think, okay, if I register for pay-as-you-earn at SARS, then I pay my UIF and stuff. They're separate things. UIF, workman's comp, you register at the Department of Labor. You don't register at SARS. A lot of people find this out years later when someone has to claim. So you register at the Department of Labor. They give you, you actually show them that you're an employer, and you submit a UR19 form every month. not your, because, and it's separate from your pay-as-you-earn form. So we find SARS will take the money. That's what happens. You pay your pay-as-you-earn every month to SARS on e-filing. SARS takes the money, and when you submit the UR19 to the actual and Department of Labor, they link the two up, and they take the money from SARS and they move it across. That's how it works in the background that we don't see. So they transfer the money across like that. So that's why you still have to submit those forms. So pay-as-you-earn now kicks in, and it's generally when staff are earning about 95,000 Rand a year now, this year. And it has changed over the years. I mean, when I started this, it was 27,000 and things like that. So essentially now, if you're looking at about 95,000 Rand and a year, break that down over the year, you're looking at about 8,500-ish, around about there. So that already shows you now, you know, staff under that don't have to pay pay-as-you-earn. But STARS still wants an RP5, you know, to show them that that person's earning something. And if they got a medical aid, then obviously there's other claims and stuff like that. So a separate thing, totally. STL, it normally kicks in for small, medium enterprises on our sort of scale that we operate with. Once your actual payroll bill is more than 500,000 Rand a year, then you got to pay STL. So it's the skills that and development. I've never seen anyone receive a benefit out of that in all the years it's been around. So I don't know where the money goes. No one can answer the question. I'm sure there's Bentleys and stuff that can answer, but I've never seen. No SME I've ever worked with has ever received the benefit out of the skills fund. So I have no idea. And then obviously VAT. So that'll sort of be the sequence that you're going. As your turnover is growing, VAT, you're going to be turning over about a bar a year. SARS is sneaky. The VAT Act doesn't say a million Rand in this year. It's R1 million over a 12-month window, trading window. So if you think about that, if you sit down and you draw up a budget and you want to go for funding, so you're going to go to the bank, get funding, you draw up this budget, and in your budget, you're going to show the bank or your funder, I'm going to be doing $1.5 million by the end of my first year. SARS says register for that, because you've got an expectation of exceeding R1 million. So that's what the law says. So no one really does that because it's that crazy. You might not have actually and achieved that. So just bear that in mind. The law is if you have an expectation of exceeding R1 million in the next 12 months, and it might straddle a year or things like that. So it might be 6 months in one tax year, 6 months in the other, register. So that's what often when you find if you do like an actual tender bid, they want a VAT number. So you can now apply for a VAT number linked to a tender. They'll ask you on e-filing, is it a tender thing? And then they'll give you a temporary VAT number. If you don't get the tender, they close down the VAT number. Okay, so they've sort of realized that larger companies are asking for VAT. You want to become a vendor, they want a VAT number. We don't have to be a VAT vendor. So those are the things you're going to see on a regular basis, generally. Yeah, if you're on our program and you're doing, if you're focusing, you're going to see all these things. Okay, questions on this now? Anyone? Okay, so the question is on workman's compensation. How do you know how much to pay? So when you do your actual salary bill, it's a it's a WA8 form that you submit to workman's comp. And normally it's now April, end of April. You can do it online. It used to be, they used to email, not email, they used to post it, believe that, post you the form. That's how long I've been doing this. So it's a WA8 form. You fill in the form, and what you do is you put your current sort of staff salaries. There are caps though. So, I mean, if your salaries are above a certain level, it is capped because they don't want to pay workman's comp on like 6 million Rand. I think it's 460,000 Rand. That's capped. So you put your existing payroll, and then what are you going to pay next year? So you sort of estimate. And then what workman's comp will do is they will There's always one. No, I'm joking. So what they then do is, depending on your industry, there's risk profiles. So us to do paperwork in the office, our risk is maybe a paper cut. If you're on a building site, your risk is higher. I mean, you look at the guys on a construction site, they fall off the scaffolding and stuff like that, or the wall falls on them, higher risk. So when you submit your WA8, they calculate what that risk is, and then they send you like a bill. It's like e-filing. You'll get a amount. Normally comes out in about June. You usually do it in April. Then by the end of June, you get that, and then you pay it. And it's an annual fee. It's not a monthly fee. It's an annual fee. So we know you like when you want your letter of good standing. That's what you got to pay. You got to pay the actual WA8 to get your actual standing. Okay. All right. Does that help?
How it work?
So the short answer is I have no idea. No. No, the internet. So what the skills and development was meant for. So way back in the day, people were doing artisans. You want to become an artisan, a bricklayer, a boiler maker, a carpenter, and stuff like that. And then you went and worked at a company, and the company could claim that expense to train the staff, whatever the industry was in. And then that was all taken away, saying, no, we don't want to do that. We're doing skills and development. The government will set up like trade schools, and then you can go there and you can get, and that'll fund it. You can claim, and if you do, you can get a claim back. It's never worked. There's a whole industry, there's a whole cottage industry around how do you do skills dev, how to claim it, and things like that. Absolutely. Yeah. And then you're going to get old very fast, I promise you. It's like, when it started, we tried to do it for, because we train and accountants often. We try to claim it, I think when the second year that it started, after 8 months, we never got a result. We just canned it. We're just like, it's not worth the headache. You know, if you think of your hourly rate that you're charging, and now you're standing filling in forms with someone who doesn't know what the forms are for, no, it's not worth the $5,000 I might get back. So, but you can go online, have a look at there's a whole industry around how to do it, how to get the claim. We just avoid it because most of our clients aren't actually interested, and there's no need. There's mostly the larger corporates where they've got massive sort of payroll taxes and stuff like that, you know, that they actually claim it. All right, anything else on these? Yeah, so the list just doesn't end. Now you know why your accountant wants to charge you money. It's endless. Okay, so these things are not sort of accounting things, but you will see these things in the course of running your business. Annual return, and a lot of small businesses get confused between annual return, which is what you pay CRPC to keep your company open. It's at 50 Rand a month, or if you late, 50 Rand a year, or if you're late, 200 Rand, because you get 150 Rand penalty. And they get confused between annual financial statements, which is an accounting thing in order to, finalize your taxes at SARS. So annual return, when you register your business, in the month that you register your business. So if you register your business now in February, next year February, you got to pay CRPC a fee, and it's 50 Rand. Depending on the size you can, there's a scale. I mean, some clients are paying 10,000 Rand, depending on how their actual income looks. So that has to happen in the month that you register. So if you register in February, every February, submit your annual return. When you're a small little company, there's a bit more technicality behind it. If you're a small little company, they just want you to sign a statement. It's called a financial report, FAR. And that just sort of breaks down who's looking after your books. Do you have a formal accounting system? Stuff like, just ask you a whole bunch of stuff. Very short form to do. If you're a larger company and you've got to have audits, you got to actually submit your annual financial statements to SME, which is new. Well, not new now, but when it started for us, it's new because we still think they're sharing that information with SARS. So you got to be very careful if you're submitting one set of documents to CRPC and another set to SARS, you're going to be in trouble. So just be aware they're going to knit all these things in the back. So just be aware of what that is. So annual return is CRPC. If you don't pay, if you don't actually pay your annual returns, they actually de-register your company. And a lot of people might think, because a lot of people, if you do have these GitHub companies, they haven't paid the annual return and think, it's fine. They'll just take it off the list. What happens is you, the shareholder, become personally liable. So if something happens in that company or they found out that you didn't submit tax returns, or they come after you personally. If the company owns an asset and it closes down and no one does anything about it, the asset gets forfeited to the state. The state owns it. Yeah, please.
After a year, your company is being registered, you will pay how much? 50 rand?
Yeah, it varies on the size of your company. There's a sliding scale on SME. So depending on your turnover, it starts out at 50 rand, and then it scales up from there to about 10,000, whatever. So yeah.
What's if your company never paid it?
Doesn't matter. Null, if it's null, you still got to pay 50 rand. Yeah. It's come down. It was 100 rand initially, but like in the day. So now it's like 50 rand. No, annual, like CRPC, and yeah, where you register. You just go online, and then you just have a profile, do your annual return, and you can pay it now with your bank card, just like your debit card.
Okay.
Yeah. 150 rand per year. Yeah.
Then I lost those DE certificates and all those things. I retrieved them, I think this year. On last year, when I was doing 6% on my personal, because I hated the company, but on the other hand, I went. So I asked for a 6% from my work, from my company, which I was working before. Then they charged me those certificates, which I never paid before. But there was money that was due to me, understand, from my account. But they deduct that money.
That's, yeah, that doesn't sound normal. The only thing that can deduct, and you might be getting mixed up with, because you registered your company at SME, you never submitted any returns. What I was saying earlier, SME registered you with SARS. So what happened is you weren't doing a tax return at SARS. SARS is charging you penalties, and that's the money they took off your pay. SARS went and got a garnishee order, and your company had to take it off your pay. Went to SARS, not to SME. Yeah, that's why you got to be careful. What I said at the beginning, don't register a company unless you're going to use it. Rather be a sole prop. So if you're working at your boss where you're working at the company and you had your little gig on the side, if that made a loss, you do a tax return, and the pay as you earn you were paying that the actual company was actually taking off, you get a refund on that loss. Much smarter way of doing it. Yeah, so that's probably what's happened. Unless there's an asset inside there or it's trading, you've got a contract or you've got something that's trading, a bank account where you can prove my money was going to, they're not going to open it. They're not going to open it. So you can get it open if there's trading happening, but your bank will normally, on their FIHICA, they'll normally come and actually ping you and say, sorry, update your SIPC, and they'll close your bank account because it isn't up to date. Okay.
There is no way.
Yeah, but I don't want to do a consultation for you and move on with them. But all those things, come, please ask us. I'm not trying to say no, please ask us. Because I mean, that's getting personal for your stuff. Okay, thanks. All right, BE certification. So although it's not law that you have to have BE, except if you're a listed company or you're a government organization, the rest of anyone else, you don't have to have a BE cert if you don't want one. You're going to be forced into it because of how the hierarchy works. The large companies work, and for government says you must have a BE certificate. So if we want to work for them, they ask us to have a BE certificate, and so on and so forth. That's how the whole thing works. And for most of the smaller companies, up to even now up to 50 million rand, you can just do an affidavit. Sign an affidavit. You're turning over 50, less than 50, and it breaks down who the shareholders are, what your B level will be. And on that affidavit, you'll either be 1, 2, or 4, generally. So, and which is more than enough to assist on your like application for like vendor financing or vendor application. TCC, tax clearance. This for us is a pain in the neck for a lot of reasons, and mostly because you get asked to get a tax clearance when you don't need it, and you get asked by people who've got no right to know what your tax affairs are. Your tax affairs are between you and SARS, no one else, no one. You've seen the court cases, Jacob Zuma fighting, you can't share your taxes. Your taxes are private. No one can share your taxes between you and SARS. So the only people who can ask you for a tax clearance, guess who? Government, because that's what it's there for. It was introduced to go and say, if you're getting tax money, prove to us your taxes are up to date, because why must we give you hard-earned tax money if you're not paying your tax? That's what it's introduced for. The only reason. So when other companies are saying to get on our vendor list, want a TCC, tell them no, you didn't see that. It's private, but they do that because now they want to go and they're using it as a hurdle to say your tax affairs in order. Your tax affairs are yours and yours only. So not enough people fight with the large corporates because they just want to tick a box. And then I want the money, I want the job. So we fill in the box. We fill in the box. Years and years and years ago, MTN didn't pay a whole lot of our clients because they wanted a tax clearance. I think it was the second year this actually arrived. And we had to get a letter from SARS telling MTN it's illegal for them to withhold the money because they're not a government organization. So be careful. Don't just give it to anyone. Your tax affairs are yours. Yeah. So nowadays, in the past, you get a little certification and you could use for a year. Nowadays, on e-filing, you get a PIN, and the person will plug that PIN in to see if you're up to date, valid, and stuff like that. But the only people who can do it are government organizations. So just remind people, the more of us who fight with the corporates about it, the less chance it happens. Okay. Even with VAT, if your turnover is less than R1 million and someone says, I need a VAT registration to get you onto the vendor list. So I don't need it. I'm not turning over enough to do it. And then because someone in the accounts and department has to tick a box and their job is not done unless the box is ticked. They don't know why they're ticking the box. So fight with them. Please fight with them. Okay. Public access to information. Oh, sorry, question. So generally it's anything that's an arm of the state, because they generally paying you with tax money. That to us is fine, because that's why should somebody use our hard-earned tax money to pay a person who's not paying their tax? So that's what it's for. So it's generally an arm of the state where that's why you need it. But private companies and stuff like that, no, tell them to take a hike. Problem is, of course, you want to get the money. So you climb onto that little wheel and off you go like a hamster. And that's how it works, unfortunately. Yeah. Public Access to Information Act. That's what that public PARA manual. They brought it in, must be about 10 years ago, maybe even more, 15 years ago. And what that act does, as the name implies, it's public access to information. So anyone in the public can come request access to information about your business. Obviously not trade secrets or anything like that, but they can ask who your shareholders, and you have to tell them. They can ask how many branches you have, or sort of anything that's not key to the actual operation of your company. They can ask for last year's signed for financial statements, and you have to hand it over. The act lets you charge them a fee for printing, and they've got to set an appointment and blah, blah, blah. But that's what that act's about. And all actual companies in SA have to have that actual manual. Government keeps on moving out for SMEs. The fact that you have to have a manual, they keep moving it out by 5 years. The last time I saw, I think the deadline's end of this year coming now, but they're probably going to move it out again. So just be aware of that thing. So while we have it on years, not saying rush out and get one, we do have the manuals. So we've got a template which we use. But be aware that somebody can come and request information, and you can't say no if it's not secrets, like secrets of your company. Where you've probably seen it at work, this recent cadre and deployment thing with the DA and the ANC for fighting. They used this act, public access to information, to get the insights of what happened at those meetings. So that's what often, that's the only time I've ever seen it being used. Once or twice in a company involvement, there was shareholders were fighting and they used it. But otherwise, yeah, just be aware of it. Okay. Employment Equity Act. Also for smaller firms, generally using the BE threshold for smaller firms. You don't have to submit the Employment Equity Act, but construction companies, turnover of about 5 bar, and also number of staff you have, then you've got to submit an Employment Equity Act form either every year or every second year, depending on the size of your company. And that's another piece of red tape that you've got to struggle through. Government wants to see how the unemployment is changing. What are the companies? Are you employing employees that, represent SA, and that's what that's for, essentially. So you can go and see, are you employing people? How's the actual makeup of the actual employees and stuff like that? And then lastly, annual financial statements. That's the goal of all your accounting and that over the year, is to gather all your monthly information, and it gets put into your annual financial statement. So it can give you a very clear idea of how your company's done over the last year. So a lot of people only ever find out how their company is done at the end of the year, which for us is a crime. You should be doing it monthly, keeping tabs of your book, looking at your book. We do that monthly with our clients. But very often, clients only see their annual financial statements. If February ended now, they might only see it in about June, or they'll only ever do one if they need annual financial statements for funding, for a tender, or anything like that, to get on a vendor list. And then they find out, yo, I've actually got profits that I didn't realize I had. I can't afford to pay tax. But meanwhile, they don't have profits because they didn't put the right expenses in the account. They just said, I just need it. And the accountant drew it up fast. And now they've got another problem because now they've handed that document in. And now there's a tax bill, and the rest of the stuff starts from there, and then it's a mess. Okay, so we like monthly financial statements, and it builds up towards the end of the year. Then you've got enough time to actually plan. Okay, questions on that so far? Cool.
Hello, can I say something?
Companies actually have to have annual financial statements. Sorry, Ed?
Mr. Now, we've got a question here.
Yeah?
Student Filelo.
Okay, thank you, Edward. I just wanted to ask with regards to the system that we're going to be using. When is it going to come into effect, and then when are we going to get like a breakdown as to how it works and things like that? Because I, for myself, I think I need some help with regards to using the system and also doing the monthly financials. So I think maybe if we can maybe explain that, it can come in handy. Thank you.
Okay, so the question is really around the Adopt the SME program. So what we're talking about here is there are companies that are going to be doing monthly bookkeeping and stuff like that. So in the course of March, this month, we'll be onboarding the actual companies. We'll be setting up their zero, their tax profiles, all of those fun things. So that's going to happen in the course of this month. It's not going to, probably some of them in April, but it's not a big issue right now. I don't think it's going to be, not like anyone's going to be like, oh, I don't have accounting now, but they probably never had accounting in the last 2 years. But yes, so that process will be happening in the course of the next sort of week or two. Okay. But yeah, just reach out to Edward. Edward is doing it. In fact, he'll be coming down here in Durbs end of the month. We'll be spending a few days here end of the month. We got some work up the road, and then they'll be doing the onboarding process physically, yeah, because we need your laptop, your phone, and those things. Okay. So does that answer that?
Yes, thank you.
Okay. Perfect. So now you've heard me talk through all these things, the actual foundations of your company. How many forms do you think you got to submit annually? Listening through all of that stuff. You guys have an idea? How many forms do you think you have to do a year? Just the basics, not even anything fancy. No? Wild guess? Yeah. 3, 700, 10, 20. Anyone? Wild guess? I can tell you it's far too many. I can tell you that it's far too many forms. All this red tape we're trying to fight. How many? Yeah, I'm going to shock you. This is why accountants charge money, not for the accounting, but for the red tape. So this is just the basics. The bare actual basics. Income tax, 3 forms a year. Okay. UIF, because you, regardless of SARS with pay as you earn, UIF at the Department of Labor, your UR19, 12 forms, 1 every month. You got to submit. Okay. Workman's comp, that's 1 form. We spoke about it in April. So that's the one there. Pay as you earn, 14 forms. So it's not just your 1 every month. In April and then September, you got to reconcile the 6 months and submit another form, EMP 501. Okay. SDL is part of your pay as you earn. It'll fall inside there. And then VAT, most people 6 forms. But if you're a company with a turnover of larger than 30 bar a year, it'll be 12 forms. If you're a smaller company, like a farming industry, it could just be 1 form. You could do it annually. That's about 42 forms. Just the basics, eh? Now think of your driver's license, your liquor board if you had a tavern, think of now the PIA manual, the employment equity report. You can be upwards of 60, 70 forms a year. Not hard. And they wonder why we say red tape kills SMEs. This is why. Other countries, there's a SME.TAX that's trying to pass. A lot of this stuff gets done on 1 form. 1 form. So yeah, it's crazy, absolutely crazy. And the scary thing is most SMEs don't actually make a profit. I think there's something like 10% of SMEs that actually make a profit. So like What are they doing all these? They can actually scrap, they can lift the tax threshold up to about 5 bar, and it won't affect the amount of tax being paid. They just scrap all these forms. If your accountant fills in like that turnover tax, if you had that and go, is your turnover less than 5 bar? Yes. Okay, boom. That's it. No forms. Don't pay as you earn, only pay UIF and only pay workman's comp. You'll go much, much further. Because what are you going to do with that extra money? Are you going to pay your staff more, or are you going to spend it on stuff? And what's that going to do? Get into the actual economy, and someone's going to be spending on stuff. So it's crazy. Yeah, that's it. So that's mental. 40 odd forms as a basic. Okay, so before we move on to the accounting stuff, that's the structure underneath. You know, that's what you're going to be doing monthly. We're going to walk through these type of things on a monthly basis. So that's what you're looking at. And the accounting speaks to all those things. Because if you've got your books, you know what your turnover is, you know what your profit is, you got to do tax. If you've got staff, you know what your payroll is, you got to do UIF, pay as you earn, compensation. So these things all talk to each other, and they all work well when you've got books. I promise you, if you do your books right, the chances of paying tax or the opportunity to minimize tax is greatly enhanced. You know, we have a lot of clients come to us and they go, I'm so scared because I haven't done books for like 2 years and I'm worried I owe SARS money. And when you do their books, they don't even make a profit. What are they stressing for? They've been lying awake at night for months. They got an ulcer for nothing. No, really, they got an ulcer for nothing because they didn't actually make a profit. Their staff were under the threshold. They didn't have to pay as you earn. But that's the power of the SARS advertising. You're going to go to jail, we're going to arrest you. Do your part, pay your taxes. Largely, we don't have to. We're not making enough money to pay it. Okay, so if you've got books, you'll know that. And even if it's rough books, you'll actually know that. So even if you keep it on a piece of paper, do it. Please do it. You'll sleep at night, I promise you. Okay, financial foundation. So this is what you want to be doing. Your books allow you to see the future. Okay, so because you know what your current stuff is, you can get an estimation of what your future earning might be. It's not obviously a guarantee. If you sit on the couch, nothing will happen unless you're a gamer. Then you want to be on the couch because you can earn money on, you know, YouTube or something like that. Different story. But your books will give you an idea of where your future is going and what you can do to either improve it and things like that. Okay, cash is obviously king. And by this, I don't necessarily just mean physical cash, but clients who pay you upfront, clients who pay you within 7 days. The trick with cash being king is you want customers to pay you early, like think of like ShopRite, Pick and Pay. You pay them immediately at the till. They pay Sasco and all the other companies 90 days later. So they've rolled that money over and over and over and over for 90 days before they pay them. That's a nice place to be. They've bought and sold more stock before they've even paid the first invoice. So that's what you want to start doing with your clients. Try and move that receipts as early as possible. And then when you pay guys, pay them a little bit later. Don't not pay them, because then there's another SME who's actually losing out. The goal is not to cheat them and not pay. Okay. What the book's going to do is you're going to have a clear picture of what your income is. The revenue will show you, this is my revenue. You can get complicated about it. We'll go through it in some of the stuff. But as long as you, as I said earlier, as long as you have an understanding of what those numbers of the page are, that's what's key. You must know what they do. Why am I paying Wi-Fi when I can go to Muggy Bean and get the free Wi-Fi and I'm drinking their coffee for 10 Rand? That's smart. Do that. But, you know, things like that. So, and you'll know that because you have the actual numbers and you can see how much you're actually spending on everything. Okay. Accounting systems. Again, there are a lot of free ones online, but anything simple, just I mean, think back in the day, you just had a book and you wrote everything inside this book. You know, if you even just keep a simple Excel spreadsheet and your actual bank statements we can do books. Quick. An accountant can sit with you and help you immediately. And you'll know what you're earning, if you're making a profit or loss or stuff like that. That's incredibly handy to have. And then obviously the key is to stay out of trouble with SARS. Not to pay SARS lots of money, but to stay out of trouble. And the trouble part of SARS is not putting the form in. So not putting the form in is a criminal offense. Not paying them is a civil offense. You know what the difference is? Criminal offense, they can arrest you, put you in jail. Civil offense, they sue you for the money. Like if you owe, let's say, not TV license, that's a bad example. But if you owe anyone money, they got to sue you, take you to court, and then you pay them off for a car, SAS, West Bank or something like that. So SARS does the same thing. They take a judgment against you and you start paying it off. They'll come to your office and they'll ask your boss to pay. You know, that kind of thing. They'll take it out of your pay. So know those two things. Just because you don't have the stuff, put the forms in. Even if you know you owe them the money, put the forms in. That's not a criminal offense. Okay, so that's what you want to be doing. That's what you want to, that's the picture you must have in your head about your company. You know, the soundness of your actual company. Okay, budgets. Okay. We do go into this a lot more later. If you haven't done a budget, you're going to have no idea where you are. And again, it doesn't have to be like hectic. It's a case of, I'm going to the flower store, I'm buying a whole bunch of roses, and I know they're costing me 5 Rand a rose, and I can sell them for 7 Rand, as an example. But on Valentine's Day, I can sell them for 300 Rand a rose because no one can find them. Know those type of things, if that's your thing. So now you must know, okay, roses I'm buying for 5 Rand, I'm selling for 7 Rand, my gross profit is 2 Rand. But now what does it cost me to get to the flower market? What does it cost me to get to my clients? That's now your costs now. How many roses do I have to sell? Because driving there for 1 rose and driving there for 1,000 roses are exactly the same amount of fuel. So what is my break even? How many clients do I have? That's why you got to do this. If you have a budget and you understand your business, you will make cash. That's why you have your budget before you make money. Sometimes you won't have all the answers. I promise you, you won't have all the answers. But as you're writing it down, as you're keeping track of it, you will start getting the answers. And you'll go, but hold on. If I'm there, I've got clients who ask me, did I have daffodils as well? Or the clients who buy roses also buy chocolates. Can I get chocolates at Macro? Macro is right near the actual flower place. Cool, petrol's the same. Margins of chocolates are higher. Now you can start asking the questions. Oh, I'm doing the same journey. I'm now making, on the same trip, I'm now making double the amount of money. That's inside your budget. So just work through these things. It doesn't have to be like higher grade. You don't have to go to varsity to figure it out. Just on a piece of paper, just write it out. Basic. Capital expenses, what is that? Using the flower example, capital expenses will be the vehicle that you're using. It's a big, heavy, expensive thing. Or if you have like a store that you've got to build or buy, that'll be a capital thing. So what are those things going to cost? Are you going to buy your car outright? Maybe you got a pension payout at your previous job, you bought your car cash. So there's no monthly installments, so that's fine. But how long before you get your money back? You might just be driving up and down and having a look at the view because you're not making any money. You might as well be driving to the beach. So understand what it's going to cost and how you're going to get your money back. Okay. How detailed are they going to be? As I've been going over, as much information as you need to make the right choice about your business. I'll show you on some of the ones you can see. Some of these things are complicated. We've got clients who split their sales by region, by product, by price point. I mean, their sales might have 17 items. Like ShopRite's income statement will have 37,000 items on there, and they can track margin on each one, how often they're selling them, what the cost of that product is before it even gets off the shelf. So you don't have to do that. Just get the basics until you have an understanding. And then how much should I actually pay myself? As much as humanly possible. Okay. And I say that and everyone laughs, but often entrepreneurs get paid last. So you sit and think to yourself, you know, yeah, well, if there's money, then I'll use that and then I can pay for this in your budget. So just think about, and this is part of your marketing research. We're going to do a marketing talk. In your research about your business, find out what people in your job. So either at your previous job, what were you earning? So you want to earn at least the same or more, or what that industry pays. So what you should be paying yourself. So if you're now an accountant, if I'm just left school and I'm now doing accounting, I might be able to charge 350 Rand an hour to actually do your books. I've got 30 years of experience, so I'm charging 2,500 Rand an hour. And when I go to corporates, I'm charging 7,500 Rand an hour. Very different picture. Very different picture. But I need to put that inside my planning. Because if I don't actually budget for what I want to earn, I'm never going to price my product right. I need to have that line item that says, what am I going to earn as an entrepreneur? Yes, you might not be able to pay yourself on day one or month 3 or month 5. But if your planning is there and you know now those roses, you've got to sell 3,000 roses a month to pay yourself 18 grand. Now you know the goal is to work up to 3,000 roses. And then you start talking about chocolates, like we said. So maybe I don't have to sell 3,000 roses. I've got to sell half the amount of roses and 1,000 slabs of chocolate. Cool, I can pay myself 18 grand. Now I'm in the right place. You see, that's what must be inside there. Don't leave your pay out because you're never going to get paid. I promise you, you'll never, ever get paid. Because if your pay is not in the pricing, you're not pricing to pay yourself. Okay. Think about that seriously. So I'm going to flick through both of these quickly. There's 2 of them. Get the idea. It can be simple, as long as it gives you the insights you need. What can be hell of a complicated. Don't pay an accountant to do the bottom one if you don't need it. Seriously, I'll make money. You won't. Don't do it. Don't do it. Grow from there. Get simple and then move up from there. Okay, so that's what we're talking about. How sort of complicated does it have to be? Something I do want to highlight on these is you must know what's your sales, what's your gross profit, and then what is your operating expenses. And why it's important is operating expenses, generally those are the things that keep your doors open. Whether you make a sale or not is your operating expenses. That might be your petrol in your car if you have to drive to do sales. It might be your cell phone. It might be your Wi-Fi. Things you're going to pay, your rent on your shop, your staff. Not sales staff, if they obviously don't need them because you're not making sales, you're going to fire those guys first. But operating expenses are the things you need to keep your doors open. That's not going to change if you don't make a sale. Know what that number is. Then your gross profit margin, your sales less your costs. So we're using the flower example again. If I'm buying flowers for 5 Rand and I'm selling them for 7 Rand, how many bloody flowers do I have to sell that my gross profit covers my OPEX? Because that's what you're after. You want to cover your monthly expenses with whether you make no sales or not. And that's going to also tell you when you have these cycles, yes, Valentine's Day, Christmas, I can sell lots of roses, and I need that because no one buys roses over Easter. They're buying chocolates. My sales will dip. So you'll know how much money you got to keep for the months where you're not making money. So just think about that when you're drawing up your budget. Gross profit covers operating expenses. So just try to work that out. It's important. Like for us who sell time, we don't have a physical thing. I can't buy pieces of accounting. We sell time. You've got 1,600 hours a year. That's it. If you sell time, if you want to laugh, You've got 1,600 hours a year. So if you take off holidays, take off sick leave, that's what you got, 1,600 hours a year. So if you want to earn an amount, divide that by how much an hour. That's what you got to promise you. We've done the maths, 1,600 hours a year. So if you want to make 10 bar a year selling time, it's going to be difficult. It's going to be difficult. But you're going to have a whole lot of accountants or lawyers underneath you, and they're going to help you make, 10 bar a year because you're supervising them and you're charging their time. So just be aware of that. It works for time and it works for product. Okay. Okay, this is the basic of books. Who owes you money? Who do you owe money to, and how much is in the bank? Every single entrepreneur who owns a company has those three things in their head all the time. I wake up in the morning, what do? I log on to check if people have paid me. And the reason I log on is because either I want to get paid or I have to pay somebody. And when there's no money in the bank, I know exactly who owes me, so I start phoning. Where's my money? That's it. That's your books. I promise you, that is your bookkeeping. So when you do an invoice and someone doesn't pay you, who owes me money? That's your debtors, it's your sales. When you can't pay somebody and they're phoning you, you're the one they're phoning, where's my money? That's your creditors. You bought something from them, you haven't paid them. That's your creditors. And you keep checking your darn bank to see if there's enough money to sort out either of those two things. Okay, and that's what bookkeeping is. Don't let it be any more complicated. That's what you're chasing. Those are the three things all the time. Okay. Okay, I'm going to skip through some of these. I touched on this about sales, cost of sales being your gross profit and your overheads. Understand that, go through it. If you can work out that, you know exactly. So we sort of call it like if you can understand your overhead, what it costs you to keep your doors open. Straight away, you can price on your feet. If I need 10 grand, I can do this. When you're talking to a client, you can scale up how much I'm going to charge them to make that money. Okay. So I put this slide in. And while we do it, we're always going to talk to you guys in terms of accounting. We won't bore you with all the legalese, but we'll always mention things by their official name. Because what's going to happen is when you apply for something, you go to the bank, you go to a funder, you go something, they're going to ask you for these things by their official name. And then you need to know what it is. So you would have heard like annual financial statements. What is that? So you know what that is. Management accounts. So management accounts are very simple. It's your income statement and your balance sheet. And it's literally the movement from your last annual financial statements to whatever month you're in at the moment. Normally they want it every 6 months if you don't have like the next set of annual financial statements. So that's what that means. It's nothing special. If your accountant's doing your books, press a button, boom, management accounts. No fancy stuff. So don't let them fool you. If your books are up to date, it's pressing a button. Okay, so that's what management accounts are. Okay, so one of the things we have from a tax point of view, people always wonder what expenses they can claim. So the law is simple. Any expense, I want to say it again, any expense in the production of income. So if you can link any expense to your income, doesn't matter what it is, if that thing helps you make money, or you can, if SARS presses you in a court case and says, why are you claiming that? And you can show, it doesn't matter how faint that line is, that thing helps me earn that money, you can claim it as an expense. So rather give your accountant everything, and I mean everything. We've had, lucky now with Insta influencers and things like that, you can claim their earning income, especially if they, I don't want to say OnlyFans because that's not true, but if they're they're being paid to be an influencer. Generally, those people are like they're keeping healthy, they're eating right, gym membership, the clothing they wear, those are expenses. So just look at the industry. Any expense in the production of income. If you're not sure what it is, keep it. Ask your accountant, because you can't find that slip later. And you can go, if you find something later, if you do happen to do that, you can go back 5 years to claim your and expenses. So you might be doing your books now and realize, sure, but 3 years ago I had all these slips. They were in a box and now I found the box. You can bring those into your existing year. You can take your expenses back up to 5 years. Okay, so just be aware of that. A lot of people just throw them away. Accountants won't ask you, please, any expense. Okay, what is the other one? Yeah, just track things like what you pay. Very often entrepreneurs, especially if you have a job and you're setting up your business, you're not keeping track of certain steps like petrol or your cell phone or things like that. Just like look for those, any expense that you pay out of your own pocket, goes off your personal account. Often when you sign up for internet and stuff like that, you might not have a credit card in your company. So I mean, that's changed now with the new cards, but often you'd actually do it on your personal account. Now, you got all these services running off your personal account, and you're not claiming them because the accountant's asking you for only your actual company books, like your actual company bank statement. And they never see that. There's thousands of rands a year there. That's just not happening. Absolutely. So it'll go under staff training and things like that. Because remember, although you might be a shareholder, you're also a staff member of your company. You wear 3 hats. You're on the board as a board member. You're an employee doing the operations, the work, and you're a shareholder owning the equity. So just any expense. If you can link it to your company, do so. Okay. We went through that. Yeah, just on this slide, the main important thing is the dates. And we spoke about cash flow and stuff. So every form that has to go in, SARS actually, there's a date in law. It's coded in the law. You don't have to guess. We know exactly when a form has to go in. We do have a document. I'll actually get Edward to share it with everyone. We've taken all these things like pay as you earn, UIF, SDL, and we've put it, it's called the year in the life of a company, and we've actually documented on one page. It's only one A4 page, and it lists the deadlines for each of these things. So look at that, because those are the key things you need. When is my VAT due? When is my pay as you earn? Because that's going to influence your cash flow. Do I have money? Don't I have money? Can I pay it? Can't I pay it? Okay. We're going to cover this about 4 times in the year. Small business corporation. Guys, make every move, mountains if you have to, but make sure your business is a small business corporation. The tax advantages and the benefits of you as a company owner, to be a small business corporation is key. It really is. I'll just run through what it is. So these are the milestones you sort of have to reach. Your turnover can't be more than 20 bar. If you're personal services like us, accounting, lawyers, where you're selling your personal time, you physically doing the work, you can't be personal. You can't be a small business. However, if you employ 3 other people that are not family, not linked to you, then you can be, as long as they linked into the sort of operations of your business and stuff like that. So there are obviously, they want to obviously make sure that one-man bands, because the job of the plan behind small business corporation is two things. One, get more cash in the hands of small business owners, and the other one is to drive up, to actually and employ a lot more people. Those are the keys behind it. So I can be a one-man band and I can happily earn a couple of million rand a year and get a tax break. That's not what they want. They want me to employ people. So that's why you see personal services, they exclude unless you're employing people. You can only own the one entity. So you can only own one registered company. You can have a side hustle on the side. That's fine, legitimate. The reason why they do that, you only own one, is that if you already have a business turning over 50 million and you think, oh, cool, I'll just split my business into 3, 20, 20, 10. Boom, I'm now a small business. Now they don't want that because you're owning multiple industries. There are sort of things around that. I mean, you can split your business and your wife can run one, your brother can run one, you can run one. Happy days. Then it's law again. So, but those are tax things we'll get into. Yeah, you're not involved in other companies. Your shareholders have to be people. You can have as many shareholders as you need now, but they all have to be individual people, and they all can't own another company. This could be the only company they own. Otherwise, you're out of the loop. Okay. And then obviously personal services, not more of your income. So that's a sort of hurdle rate. It's very easy to achieve this. It's not like it's really hard. But these are the savings if you do that. Now, obviously, bear in mind, I just said like most SMEs don't actually make a profit, but if you make a profit, this is the kind of savings that you're expecting. This is the current tax law from the budget speech that was happening now in February. So essentially 91,000 Rand in income tax is what you're saving if you're a small business corporation. And that's not, it's come down actually. It used to be much higher. It used to be 98,000. So with they've moved the thresholds, but they haven't actually increased them. That 550 should probably be closer to 1.5. And then we'll start seeing some good movement. But the tax saving is 90,000. Now, if you think about that, if you're going to pay that over, what could you have spent it on? You can hire a staff member, you can buy a vehicle, those type of things. So that's where the savings actually arrive. But the real savings are obviously in what you can write off. So you have a laptop or any tech, write it off 100% in the year that you buy it. If you have equipment, trucks, car wash, whatever, those things you can write off 50%, 30%, and that's a massive savings. So if you think about, you got a profit of 550,000, you got a car wash that's cost you a million rand, you can write off 500,000 in that first year. Now your profit's gone. You're not paying tax at all. So that's the thing. That's the actual saving. So these things make more sense, and we're going to dive into it a lot more as we go through it. Okay. Cool. Yeah, these are just like reports that we run to just check the health of your company and stuff like that. But I think that's really the end of it in terms of the highlights of your actual company over the year. Just see, yeah. I'll touch on this quickly. We are going to go through in terms of financing. We've got a whole financing talk, but this is kind of where you get your money generally. Initially, it's friends, family, and fools. So people you know, it'll be your parents, it'll be your cousin, it'll be somebody who you know, a friend of yours will help you out. But normal types of funding will be an overdraft. The easiest one to get is an overdraft. Most banks, if you're putting the money through your account and it's going in and out, they automatically will work out an overdraft for you. It's almost built into the system. So the easiest one is overdraft, and then it will go from there. Vehicle loans, probably. Business finance loans, impossible. Yeah, they make it incredibly hard. You got to prove you don't need the money, and then they'll fund you. And then obviously invoicing. So like invoice number 3 for the invoicing. So what happens is you might get a purchase order at a company and now you can't buy the stock. You can actually, banks will fund that. If you show them that it's R1 million invoice, the costs of the goods are only 500,000 Rand, you're going to make 500,000. They will fund that 500,000. They'll actually pay the person, drop off the product, and once it's been signed off, they pay you out, obviously less the actual 500,000. So it's turning into quite a big, like actual big industry. Sasfin Bank has a product where it happens automatically. You can actually, if you use the actual platform, you literally do your invoicing on there and you can do it automatically. Invoice these ones, claim, and they'll actually fund you. So it's becoming easier with tech. I think that's, just gonna see what else is going to be. Yes. Yeah, again, these type of funding, unsecured lending is obviously from friends and family. Places like Capitec, Retail Capital, Bridgman, they all have unsecured lending where you don't have to put down assets. It's mostly based on your trade, what your trade is doing. Okay, convertible notes, let's get more technical, or you sell equity. You sell some of your company to raise funds. Okay, and then suppliers. Suppliers are one, like we use the example of ShopRite. They get the product now, they pay them in 90 days. So effectively, the people are funding ShopRite. They're putting the product in there and stuff like that. Yeah. And that's it. So yeah, I know it's a longer session than normal. It's about an hour normally. But we had to cover this whole ground to give an idea what the picture looks like over the year. Okay. And each of the talks going forward, I'm going to break these things down. Marketing, social media, tax, way more detailed tax, way more how to do your budget planning and stuff like that. But the key thing is, guys, if you're thinking of something, mail us, send us an email, please. A lot of the stuff we can do for you for free. If it's technical, like you want us to do a business plan, obviously we'll chat with you about that. But anything, you got a question about something, send us an email. That's going to make your life easier, I promise you. Yeah, cool. Thank you, everyone. I really appreciate your time. Looking forward to this year. This is year number 2 at the Sharks. So and the group is getting bigger. So this is great. Thank you. We really appreciate it. Okay. Ciao. Thanks, Ed.
Thanks, Tyron. Thanks, everybody online. We'll make this video available on our website.
Thanks.